Welcome to the Compliance 911 Show, a no-nonsense podcast discussing hot topics for today's busy compliance professional. It's everything you wanted to know about regulatory compliance, but we're afraid to ask. And now, here are your hosts, Dean Stockford of M&M Consulting and Len Suzio of Geodata Vision.
Welcome to our podcast series addressing everything you wanted to know about regulatory compliance, but were afraid to ask. This is Len Suzio with Geodata Vision. I'm joined today by Dean Stockford of M&M Consulting. Good morning, Dean, and a happy new year. What are you teeing up for today's discussion?
Len, happy new year to you as well. It's great to be back in I'll call it our hot seats so that we can continue our series throughout 2025. So it looks really exciting. And welcome back to everyone for another great episode, as I always call it, of the Compliance 911 Show. We're the go-to podcast for the latest trends, issues, and hot topics in the financial services industry. 2024 was certainly an interesting year in compliance, to say the least. Now, I know when we talk in the next podcast that we're going to record with you, Len, that you're going to kind of break some stuff down from a political perspective as well and the impact that will have. But I believe 2025 will continue to bring changes and challenges. So I thought it would be good to take a peek inside of what might be on the horizon.
I could tell you, Dean, it's definitely a hot topic from everything the emails I get and the things I've been seeing on the internet. Everyone is curious. What kind of regulatory changes are to be expected in 2025? So this is another great topic as always. And so let's talk to our audience. What is coming down the pipeline?
Yeah. Well, first up, I think we should talk about regulatory landscape. Of course, the world of bank regulatory compliance is very fluid. It's always evolving, and 2025 is shaping up to be a big year for new regulations and enforcement.
You're scaring me. With the new administration, I thought we would see some regulatory easing. Isn't that the case?
Well, I think you'll probably address that more than anything. But yes, I agree, Len, that with the Republican-run House, Senate presidency, we should experience a change in policy and perhaps some regulatory reprieve. But we must remember, it will take, quite a while. I always said close to probably 2 years or towards the end of Trump's term as president before we start to realize the effects of any change. So, 2025 should be a hot year, perhaps expensive for some, and we'll have to just see what happens.
So from your point of view, Dean, what specifically should we be watching for?
Well, I think, from what I've been reading, of course, I try to stay up in tune with what's going on, but one of the most anticipated changes is around the anti-money laundering and know your customer /CIP rules that were put in place after 9/11. Know your customer, obviously, in place prior to 9/11, and then the updates under the Patriot Act for CIP. But as financial institutions continue to fight illicit activities and fraud like money laundering and fraud, of course, there's growing pressure to apply what we call enhanced due diligence as part of the customer due diligence, or maybe I should say profiling of your customers to establish a baseline of risk. Now there are international standards at play here too, with FATF, which is the Financial Action Task Force. It's working to streamline global AML regulations, which will likely mean more, harmonization between various countries. So now we're, again, taking it kind of out of the domestic purview and looking at it from a more global perspective. This is crucial for cross-border transactions. So we can expect heightened scrutiny in those jurisdictions under various lists that we have to check and that have lagged in implementing certain standards consistent with U.S. law. And here in the U.S., FinCEN, of course, the Financial Crimes Enforcement Network, is expected to introduce actually more robust reporting requirements for banks, particularly focusing on beneficial ownership transparency. And those were implemented many years ago, where we have to identify and verify the true identity of beneficial owners of legal entity customers. So if you're in the U.S. banking sector, expect more compliance cost and administrative work related to these new regulations, because they're going to enhance and expand those requirements and put a great deal more emphasis on identifying those true beneficial owners.
Oh boy, I think you just made a few of our bank listeners today apprehensive more than ever. BSA and AML rules have always been high risk, and it sounds like we will continue to see enhancing provisions, especially in light of the TD Bank penalties handed down in 2024 related to BSA and AML. What do you say about that, Dean?
Yeah, well, you're certainly spot on. I mean, next up is probably technology, because it's not just about the regulations. Technology has become a key enabler of compliance, and in 2025, we'll see even more innovations in this area. But yes, the TD Bank penalties have opened the eyes. They've certainly applied pressure, continued pressure on institutions for compliance. And as we get more advanced in technology, a great deal of emphasis is being placed on those types of systems. We're certainly seeing a growing trend in banks turning to AI-powered compliance systems. And I'm talking about the tools that can help automate everything from transaction monitoring to risk assessment, customer identification. In fact, machine learning algorithms are increasingly being used to detect fraudulent activity and suspicious transactions in real time, which is huge given the financial losses for fraud over the last year. With all of the information, with all of the automation, obviously you can imagine that there are new risks that are born out of that. And I think one major concern for compliance officers in 2025 will be AI and AI bias. Banks will need to ensure that their algorithms are fair, transparent, and non-discriminatory. We may even see new regulations around AI in the financial space. And of course, I always say, emphasis added, remember fair lending. I mean, we just came off of a blockbuster year, ultimately, with fair lending. And Len, you and I, quite frankly, have been on the forefront of that. And we've seen how these algorithms and how AI is used to analyze large data sets and the effectiveness of that. So, I do believe that, again, compliance officers will have to be in tune with that and bring themselves up to speed, because it'll be major. And don't forget about blockchain. Oh, gosh, we hear about that every day, but it continues to be a hot topic with potential applications for, improving transparency, reducing the fraud, and streamlining some of our compliance checks. With increasing, adoption in finance, there will be a push for more standards, and I think regulations governing the use of banking transactions. So it's going to be very interesting.
Dean, I totally agree with you. I think you're spot on with how AI will impact banking. This should be an interesting year to see how AI will impact just about every area in the financial space.
Yeah, correct. An interesting year is probably an understatement.
Mm-hmm.
Of course, we almost talk about cybersecurity and data protection too, because those are the things that, of course, keep me up at night continuously. And when you start talking about AI, I think those kind of they kind of go hand in hand: cybersecurity, data protection, and artificial intelligence. As we know, that banking systems are constantly targeted by cyber attacks, and with the rise of the digital banking, these risks are only going to metastasize, I believe. So here again, compliance officers need to have that hyper awareness, I guess you could say, of their institution's cybersecurity protocols. Expect to see much stricter guidelines on how banks handle customer data, especially as we see stricter data protection laws coming into play, such as the European Union's GDPR and the California Consumer Privacy Act, which was put into place in 24.
Dean, what is EU GDPR?
Well, that is another, of course, great question. I kind of figured you'd pick up on that. But the General Data Protection Regulation is what the acronym is GDPR. It's the European Union regulation on information privacy, similar to the United States, in the European Economic Area. So it's probably, I don't know if it's just my opinion, but I'll say that in my opinion, probably the toughest privacy and security law in the world, imposing obligations on organizations that target or collect data related to people that are obviously, in this case, are located in the European Union. And if we see something similar to that, it would be the same ultimately here for the United States. But it sets out detailed requirements for companies and organizations on how they collect, store, and of course manage personal data, and more specifically, Don, personal, public, or non-public personal information, as we know, NPPI.
Dean, I could see why you think 2025 will be a big year. Unfortunately, not in a great way for bankers. Just these initial high risk areas that you mentioned are significant. I can't imagine even more.
Yeah, well, roger that. But I want to mention just a couple more because, again, these, I could probably go on for days. Of course, podcast, and we'd lose all of our listeners if they had to listen to me for a day and a half. But banks will need to tighten controls, Len. There's just no other way around it, especially over third-party risk management. And with the increase in cloud computing and the use of third-party vendors, it's certainly going to be high on the list. I want to round out the discussion with the topic that is always front and center. And of course, we can't talk about compliance without consumer protection and financial inclusion. So I think regulators are continuing to focus on protecting consumers, especially with everything we just talked about in this digital era. This means more scrutiny on digital lending fees, disclosures. In 25, we'll likely see more regulatory guidance, especially on unfair, deceptive, and abusive practices within digital financial services. I've always talked about UDAP being, the broad brush regulation painted across every area of the bank. So you can certainly expect that the regulators will grab a hold of this and apply it in the digital era that I'm referring to. And speaking of inclusion, financial inclusion will be a huge focus. I think more banks will be under pressure to serve underserved communities. And with the changes to this, Community Reinvestment Act, we'll need to invest more in low-income areas. And of course, I always have to say this, you can't forget about 1071.
Oh, yes. Especially 1071, the first phase of it, the first reporting data collection is supposed to commence in the middle of this year, July 18th for Tier 1 reporters. So, Dean, this has been another great topic and a timely one. And I want to thank you for your invaluable and informative comments today. To our audience, this is Len Suzio from Geodata Vision.
And this is Dean Stockford from M&M Consulting saying thank you for tuning in to today's discussion. To all of you compliance officers, legal teams, financial professionals out there, stay ahead of the curve and continue to adapt as these changes unfold. We hope you found today's episode helpful in preparing for the future of bank compliance, but please let us know of any additional topics you'd like to hear in future episodes.
Thanks for listening to the Compliance 911 Show. If you like the podcast, be sure to subscribe so you don't miss an episode. While you're at it, please give us a like and review to help others find the show. As always, links are in the show notes, and you can always find us online at compliance911show.com. Follow M&M Consulting and Geodata Vision on LinkedIn for all the latest news and information on compliance hot topics.